Nifty to help us help you better. All right, quick check on where the markets are at. You're seeing the Nifty 50 down around 0.8 odd %. So there is some bit of pressure, but it's off the day's lows. So that accentuated pressure at the start of the day, maybe seeing a bit of recovery. We are above 24,800, but we are fluctuating nonetheless. It's a very range-bound market. 120 odd points is the band in which the Nifty 50 is trading at. Let's pull up the contributors, and there you'll see HDFC Bank single-handedly aiding the positives. You look at all of the other positives, pretty much all the others combined contributing to less than 10 points, HDFC contributing to nearly 50 positive points on the Nifty 50. Where the negatives are concerned, or the losers, the negative contributories, you're seeing ICICI, Reliance Industries, all the heavyweights coming and pushing on the index lower. You have 200 points down now on the Nifty 50. So that's currently the texture of the market. In terms of where the small and mid cap, where the broader markets are, let's pull up the advanced decline to just get a sense of what's happening with regard to the breadth of the market. The mid cap index, of course, down around 0.6 odd %, but the breadth not as bad. We're seeing, of course, some bit of negative on the breadth, but not as bad as one would think of it when we saw how global cues have come through. So that's currently the texture. Of course, specific names buzzing, but let's pull up, if we can quickly pull up the sectoral heat map, see which sectors have been buzzing. The Nifty Auto down 2.1, 2.2 odd %. So that one's under some real pressure. Metals also under pressure, second consecutive day. And you're seeing realty stocks also under pressure, along with PSU banks. So plenty of sectors under pressure, IT too, one of them. The only couple of ones which are not seeing as much pressure, you're seeing the pharmaceutical, Nifty Pharma, doing decently on an otherwise tepid day of trade. But one stock which is in focus, and among all of the others that we'll discuss through this show, is Zomato. Of course, very strong numbers. Blinkit really pulling its weight for Zomato. Let's try and first break down those numbers, understand what brokerages are also perhaps saying, why this level of positivity, 12% higher. In fact, intraday it was up over 18%. We go across to Mahima, who's going to break that down for us.
Right, Hersh. So you're absolutely right. Stellar set of numbers for Zomato in Q1 FY25. Just to break down the numbers, revenue is up 18%. EBITDA has significantly improved from that 86 crores to 177 crores, and net profit is up 45% QOQ. Now, overall, if we see the highlights, the food delivery business has grown around 12% QOQ and around 45% YOY. And when we talk about the quick commerce, that is Blinkit, it has grown around 23% quarter on quarter, and it's grown 2.5 times as compared to FY24. Now, quickly about what brokerages are saying. Well, brokerages are pretty bullish on Zomato. The target prices range between, from 270 to almost 350, and poses an upside of 17% to 47% from yesterday's closing. Well, City on Zomato, well, it's posed a target price of 280. What it's saying is that it's yet another stellar quarter, and they've raised their gross order value estimates for food delivery by 1 to 2%, and for Blinkit by almost 18 to 16% going forward. What they're saying is that gross order value growth will be 20% for food delivery and 50% plus for the quick commerce business. And overall EBITDA growth of 55% CAGR is what they're expecting over FY25 to 27 estimates. Well, Nuvama is also bullish on Zomato, given a target price of 285, upside of 20%. They're saying that Zomato continues to deliver its promise of strong growth, and management is not dialing down on its growth ambition, as the management has guided that they will open 2,000 new dark stores by the end of calendar year 26. And what Nuvama is saying is that they now value the food delivery part at $14 billion and Blinkit at $13 billion. Axis Capital again is bullish on Zomato with a target price of 287. What they're saying is that they're raising the FY25 to 27 estimates top line by 7 to 12%, and they believe that Zomato execution is best in class. Lastly, CLSA has maintained outperform for Zomato and target price of 350. Now, this is the highest target price on Zomato, and they believe that it is clearing out competition in every which way for any other other players in the industry. So this is the overall view of what brokerages are saying about Zomato and how Zomato is performing.
All right. Thank you for that, Mahima. Let's go across to both of our guests. We have G. Chokalingam, founder and MD at Economics Research, and we have Ayush Mehta, technical research and analyst at Nirmal Bang. Let me come to you first, Mr. Chokalingam. Talk us through what your key takeaways from Zomato are. Would you significantly start to see currently trading at 260? How do you look at valuations as well as the numbers? Give us your perspective.
Yeah, certainly. I mean, I am always a conservative in nature, and I rightly said the stock from 40 rupees to 260, it's almost near sunset. Now, it is trading at a trailing P of around more than 200 PE. Assume that they maintain 100% growth in revenue, 100% growth in profit for next 3 years. It's difficult to grow business consistently 100% year after year, because the beauty of arithmetic limitation also will start playing out. That is a base effect. So net to net, I find it difficult to give a buy call at this price.
Okay, right. So be conservative is the view coming in from Mr. Chokalingam with regard to Zomato, but clearly stock flying away in trade today. Let's quickly shift focus to queries. I'm going to take the first one. Ramesh Prabhu from Mumbai holds 750 shares of RVNL at 139 rupees a piece. Mr. Chokalingam, let me come to you because what he's asking for.
No, I would not suggest accumulation. He can hold on to it. If the stock rises further, he should book profit because valuations are quite stretched.
Okay, Ayush, let me come to you. So first off, welcome. Secondly, we have Riddhi Jain, who's holding 500 shares of Hudco at 343 rupees a piece, asking whether she should hold or she should sell Hudco.
Hudco has shown some good rally from 218, 220 levels, and it went all the way to 350 levels. No doubt it has retraced a bit from the high levels. I would recommend to put a stop loss here. 292 is a very strong support zone for this stock, which is 50-day moving average. As long as it is holding 290, you should definitely hold it. But once the 290 is broken on the closing basis, then definitely you should exit from this stock.
Okay, so 290 is the number he's looking at, Ayush is looking at. Mr. Chokalingam, we have Vinod from Chennai holding 100 shares of Geo Finance at 332 rupees a piece. Wants your outlook from a 2 to 3 year perspective on this one.
We have a coverage, we have a buy call, and we consider this Geo Financial as one of the most high conviction stocks in our coverage. For simple two reasons: that it's a part of Reliance Group, and Reliance has never gone wrong in creating a new vertical and growing the size of the business. Second, on the valuation, it is trading at around 1.6 times book value if we consider the market value of Reliance shares held by Geo Finance. And I believe that it will become one of the biggest financial service industries firm in the 3 to 5 years. And I believe that it can be a multi-bagger in 3 to 5 years, purely based on the valuation and the reputation of the promoters. And hence, I would give a strong buy recommendation on Geo Finance.
Understood, Mr. Chokalingam. Now we have Murthy from Vijayawada holding Infibeam shares. Ayush, I'll come to you on this one. He's holding Infibeam shares at 31 rupees a piece. Wants to understand whether he should hold or sell.
Infibeam is consolidating from quite some time now. It is following a range of from the higher side is 33, 34 rupees, and the downside is 27, 28. The thing is, it is on the downward side right now. It has taken the support of its 50-day moving average in today's session. So minimum we can expect 33 rupees in that stock in the coming term. But around 33, 34, you should exit this stock.
Okay. Mr. Chokalingam, we have Ravi holding 1,000 shares in Tata Steel at 174 rupees a piece. Wants to understand outlook. My guess is from a medium to long-term perspective. Commodity play down maybe 10% from his buy price.
If he is willing to hold for 2-3 years, he can hold. Otherwise, in the short to medium term, I find more stress for commodity plays. We have seen last couple of months tremendous pressure on the realization on the entire basket of metal and steel products. So therefore, if he's a short-term investor, it's good to sell. If he is willing to wait for 2-3 years, definitely he can hold on and he can accumulate on declines.
Understood. I want to quickly stick with you, Mr. Chokalingam. Jay Shah holding 50 shares of Adani Ports at 900 rupees a piece. Of course, he's making a decentish profit on this one. Wants to understand your outlook from the longer term.
For long term, he can hold. Definitely, there is a lot of potential from port business. If he's willing to wait for 2-3 years, he can hold on to it.
Understood. Okay, we are going to slip into a very short break. On the other side, we'll continue to take your queries, so stay tuned. You're watching Ask Profit on NDTV Profit. Welcome back. Thanks for staying tuned to Ask Profit. You can continue sending your queries on the number flashing at the bottom of your screen now, and we'll try to take as many as we can. Let me go back to Ayush. Ayush, we have Prabhu from Tamil Nadu holding 1 lakh shares of NCC. I'm not sure if I'm reading that right, but at least that's what he's suggesting. At 356 rupees a piece. Should he hold, sell? What should he do at this point?
We're talking about NCC. NCC has given a tremendous breakout over the years, forming a good high bottom formation, and currently even in this market it is holding itself well. So I think NCC should definitely hold. The minimum targets I'm seeing here is 375 for NCC.
Okay, let me go across to Sivaraj from Pondicherry. He is also holding around 2,000 shares of BEL at 330 rupees a piece. Ayush, your views with regard to BEL from a hold or a sell?
We're talking about BEL. It has broken a 50-day moving average in today's trading session. So as long as it is holding 300 rupees, we should keep it as a stop loss. 300 should be the stop loss. Once it is closed below 300, then definitely should exit from here. Any fresh rally in the stock will be seen only about 325 levels.
Understood. Mr. Chokalingam, we have Srinu wanting to understand your outlook with regard to Yes Bank. Just give us a breakdown, because the stock has seen a bit of a rally. There is, of course, the SBI stake sale also, which is coming into play. So there are plenty of moving parts here. Just give us your views from a medium-term perspective for Shrinu's benefit.
Certainly, it's a hold. And if it keep declining from current level, definitely one can buy. for a couple of reasons. Even if SBI sells, I'm sure there will be a lot of takers for this bank stock because there is no depth of demand for all these big sales coming in the market we are seeing in the recent time. And fundamentally also, the bank has improved the quality of assets in the last 2 years. And in terms of valuation also, it's around 1.4, 1.5 times price to adjusted book value. And therefore, it's quite attractive. So if it falls, one can definitely accumulate for medium to long term.
Okay, Ayush, can I come to you with regard to the technical view on Yes Bank? Because this one has a lot of investor interest, and two, it's quite a big mover on most days.
Well, talking about Yes Bank has definitely formed a good base from last 2-3 weeks. No doubt we are seeing some selling pressure at 28 rupees levels, approximately around 27 to 28 rupees. So that's the big resistance zone for Yes Bank. Yes Bank is currently forming a penny pattern formation. Once it crosses 27 again, it's going to be a good rally in Yes Bank, which can take it again to 30, 32 levels here. The downside support for Yes Bank is currently placed at 24 rupees. There's one disclosure. Me and my family is holding Yes Bank for a long-term portfolio.
Okay, thank you for that. Mr. Chokalingam, let me come back to you. Your outlook with regard to Titagarh. Now, this stock, 45% up year to date. When I'm looking at the 1 year chart, it's been blockbuster, 132%. So I want to understand from you both on valuations as well as on the future growth potential and execution for something like a Titagarh. How should one look at a stock like this now?
It's a good company, no doubt about it. Track record is good. But is it a good valuation? I have my own doubt. And secondly, the railway capex also is expected to grow only in a poor single digit. That would be slightly negative for such companies. So therefore, I would give sell call on Titagarh Rail.
Sell call on Titagarh Rail. That's a query asked by Sujata Shinde. Let me move on. Anil Chaudhary from Mumbai holding 256 shares of Birlasoft at 726 rupees a piece. If I can come to you, Mr. Chokalingam, he wants a slightly longer term outlook from you on Birlasoft because this one, soft set of numbers and has been under pressure since the last few days.
Yeah, it's a good company, no doubt about it. But if I always look at two ways, the mid-sized IT companies, because a lot of mid-sized small companies were taken over in the last 10 years. And so I look at the enterprise value to annual revenues. So I'm normally comfortable if it is around 2 times. Similarly, the P ratio. So in both perspectives, the Birlasoft even at this price doesn't have valuation comfort. I would rather recommend a stock like Axelia Solutions. It trades around only 20-21 PE, and it is held by the world's largest private equity fund. And these funds are known for creating value addition in their own benefit because normally they don't become a permanent promoters of any company which they take over. So therefore, my uptick is on Axelia instead of Birlasoft.
Understood. Anil, I hope you found that valuable because Birlasoft may not be the option, but you've got an option in Axelia Solutions. There you go. Now, let me shift focus to something. Let me shift focus to the technical side on Birlasoft actually. Let me come to you, Ayush, because we've seen a 15% fall in the stock price in the last 5 days where Birlasoft is concerned. How is this looking on charts and what levels should Anil monitor?
Well, Birlasoft is looking weak at the charts currently. We had initiated a sell call on Birlasoft on 31st at around 700 levels. Initial targets was 670, which we had achieved also. But the charts are not looking very positive at the moment. The big support zone for Birlasoft is currently placed at 580 levels. So any bounce back is expected is at around 580 levels only. So I think you should exit if the holding is shut down.
Okay, Ayush, I'll stick with you. Venugopal Reddy from Hyderabad wanting to understand whether he can make a trade in Union Bank from a shorter term perspective. So how is charts for Union Bank looking?
Well, Union Bank charts are not very attractive at the moment. It has broken 200-day moving average and there's no sign of reversal. A small 1 to 2 rupees rally is fine, but I don't see any good trade here at the moment. So Union Bank is an avoid right now.
Chokalingam, we have Rajiv from Bombay wanting to understand long-term outlook on Jindal SAW.
A great company, no doubt about it. One can hold on to it for next 2-3 years.
Okay. You believe that growth prospects look good, valuations also look good. If you can just give us some perspective, if at all, Mr. Chokalingam.
Yeah, valuation, 8 out of 10 small and mid-cap stock, it's not there at all. But then if you look at it, you keep missing the opportunity. Slightly stretched, but then, definitely this pipe company has done phenomenally well in the last 5 years. So therefore, P will shrink in next 2-3 years, and definitely it is good to hold.
Okay. Let me switch focus to you, Ayush. Ramakrishnan holding 500 shares of IOB at 68 rupees a piece. Wanting to understand from you whether he should hold, sell, what should he do with it?
IOB is holding at 168 rupees a piece, well, it is currently around 65 rupees. Well, the thing is, it is consolidating from quite some time now. So I would recommend to put a trailing stop loss of 60 rupees. If that is crossed, then definitely should exit. Above 68 rupees, it's going to be a good rally, which can again take the stock towards 75 to 80 levels.
Okay. Mr. Chokalingam, I'll switch focus to you on the fundamental side. Narsimha from Hyderabad holding 7,993 shares of Varun Beverages at 859 rupees a piece. Long-term outlook is what he wants to understand from you. Should he continue to allow this compounding story to continue to play out, or should he start cutting down?
No, definitely, it is a great growth story for long term, no doubt about it. If he's willing to wait for 2 to 3 years, he can hold. Otherwise, if he's a short to medium term investor, he can sell it, and possibly if the stock falls even 10%, he can buy back.
Okay, now the next one is very interesting. I'll stick with you, Mr. Chokalingam. We have Saravanavasan from Madurai. I apologize for that slightly complicated name. Now holding around 23 shares of HAL at 4611 rupees a piece, so 4,611. It's a tough one because HAL has risen to those levels of 5,700 and then come off. What do you expect from a longer term perspective, both from a valuation as well as from a growth perspective? Mr. Chokalingam, please give your insights on this one.
The long-term growth is already captured by the price. That's my strong view by HAL. I think he bought at a wrong price for long-term. The investors who are losing, definitely they can hold on. And once possibly if they recover the cost, one can exit HAL.
Okay, so exit HAL, but what is a good entry point then, as per you, in terms of valuation comfort?
See, there are many, as I said, I'm a little conservative. I don't compromise too much. I started compromising on the valuation at margin. We are forced to, but I don't want to compromise fully. So from that perspective, in PSU space, I would give 2 stocks. One is a Coal India, the other one is a Balmalari company, where in Balmalari company, we have also invested. These are the 2 PSU stocks I find amazing. Coal India got a graphite mineral mine. And also there was a proposal as per the media sources to list 2 subsidiaries engaged in coking coal and research services. So they would be valuation accretive, and it is trading at 8 PE, Coal India, and also 5% dividend yield. So, and definitely for next 10 years, the demand for coal is going to be robust. So this is one of the best stocks in PSUs according to me. And Balmalari company is a logistic company, still trading at 17-18 PE. I am surprised the way it is trading at a 17-18 PE. Cash-rich company. It has got a joint venture in UAE, which is doubling the profit every 3 years. And it's a huge assets because it is more than 150 years old. It has got logistic infra assets in the country, which are very huge. So considering all that, I find Balmalari in the small and mid-cap space, Coal India in the large cap space, as the best 2 PSU stocks in personal view.
Okay, so speaking of PSU, speaking of power, we have Rajesh who owns 300 shares of Ireda at 270 rupees a piece. Mr. Chokalingam, your advice for someone like Rajesh who's holding Ireda at 270?
My research we will sell on Ireda and buy stocks like Coal India.
Okay, so that's your advice. Thank you so much, both of you gentlemen, because we are out of time on this one. Thank you, Mr. Chokalingam. Thank you, Ayush, for joining us. And, completely out of time on this show from myself and everyone who puts the show together. Thanks so much for watching. More on the other side. Stay tuned to NDTV Profit.
welcome. You're watching Hot Money, and it's not a very interesting Friday afternoon. The markets are under some pressure on back of weak global cues. A weak handover from Wall Street led to Asian markets selling off, and D Street has followed suit. We're sub 25,000 today, in fact, trading closer to levels of 24,800. It's volatile and remaining to be in that range as we see it. The breadth of the market is also quite weak, and there's been no significant recovery after what we saw in early trade. Well, in terms of what we see on top terms of movers this afternoon, afternoon, you've got 40 stocks that are trading lower. You've got 10 counters that are trading with a small positive bias. Surprisingly, HDFC Bank is up 2% today. Kotak Mahindra Bank is trading marginally higher. Dr. Reddy's, Asian Paints and Adani Ports are some of the few gainers in early trade. Well, on the sell side, Maruti is down 5%. So autos are taking it to the chin on back of disappointing monthly sale numbers. Tata Motors reported earnings that were better than the street was expecting, but the markets don't seem pleased. Tata Motors also trading weaker. Eicher, Tata Motors and Maruti make your top three losers in trade this afternoon. Metals aren't doing well either. So apart from weak global cues, the fact that there could be a retrospective royalty that some of these metal majors or miners will have to pay is leading to a sell-off on the likes of a Tata Steel and Hindalco. Tech is looking weak as expected. ONGC also trading with a negative bias. Across the broader markets, the picture is pretty much the same. The Nifty 500 trades with a cut of 0.7%. Your biggest loser is Cummins India, down 8% from the get-go this morning. Imami is trading down 5%. Birla Soft, Escorts, Capri Global, 361 WAM are some of your top losers in the trading session. Well, on the winning side, the day for good reason belongs to Zomato, 12.5% higher. It already got a gap up this morning, was higher by 7%, peaked somewhere around 11 o'clock and continues to trade higher with a gain of 12.5%. Numbers were good, brokerages are enthused, and it generally seems like targets of 280 to 320 are doing the rounds on Zomato. But Mahima is standing by with more on that. Mahima, this has come out of nowhere. I still remember last quarter when Zomato reported earnings. The street was disappointed. The stock was languishing at 150 to 160. What a stark difference in this quarter. What's worked for them? What's changed?
Right, Samina, so basically it's a stellar quarter for Zomato, and overall if we see, revenue has grown 18%, EBITDA has significantly improved from that 86 crore mark to that 177 crore. Margins have doubled from 2.4 to 4.2, and overall if you see, net profit has grown 45% QOQ. Now this is of course numbers QOQ. A couple of things, the food delivery business has posted a growth of 12% QOQ and almost 45% YOY, and Blinkit, which is the quick commerce, has posted a growth of almost 45% this quarter, and overall if we see, it is YOY, it has grown over 2.5 times. So I think Blinkit is something that is auguring growth for Zomato, and which is why Zomato has turned profitable as well in the past 4 to 5 quarters. Overall if you see, other segments are also doing very well. Dining out vertical also swung into operating profitability this quarter, and food delivery contribution margins have slightly declined. However, the overall margins of the other segments have held the margins high. Now in terms of monthly transaction users for quick commerce, that is Blinkit, it has grown more than 100%, and for food delivery it has grown around 16%, and gross order value for food delivery has grown around 10%, and for quick commerce it has grown around 4%. Now management has guided that they are confident of doing the 20% growth on food delivery, and overall they're planning to add around 2,000 dark stores, which is at present 639 by calendar year 26. So this is roughly overall reasons why Zomato is zooming in trade today.
And that big launch, Mahima, of District is also going to be something that could potentially generate the delta for Zomato from here on. But what do brokerages think? Where is the excitement, and what are the target prices doing the rounds?
Right, so absolutely. So brokerages are pretty bullish on Zomato. The price range is between 270 to almost 350. So that's the upside is ranging from that 17% mark to almost a 47% mark. To start with, City on Zomato, it's given a target price of 280, and it remains their top pick. What they're saying is that they've raised their gross order value estimates for food delivery between 1 to 2%, and same for quick commerce between 16 to 18%. They have also raised the CAGR growth for food delivery in gross order value by 20% and 50% plus for quick commerce. And overall EBITDA CAGR growth, they are estimating at 55% over FY25 to 27 estimates. Nuvama is also bullish on Zomato with a target price of 285. What they're saying is that they're now valuing the food delivery business at $14 billion and quick commerce at $13 billion. Access Capital again is bullish on Zomato with a target price of 287. What they're saying is that they're confident in quick commerce and they raised the top line estimates by 7 to 12% over FY25 to 27 estimates. And lastly, CLSA has maintained outperform with the highest target price so far amongst all the brokerages, which is 350. They're saying that, Blinkit saw profitability improve despite a rapid acceleration in the dark stores. And what they're saying is that food delivery also in the middle game, but at a strategic edge. And they're raising their earnings estimates by 6 to 36% over FY25 to 27 estimates, and target price is equal weighted blend of DC and of FY26 PE, and higher multiple for Blinkit and food delivery and higher earnings for both is what the brokerage is estimating. So this is the overall view of what brokerages are making on Zomato.
Thank you for that, Mahima. It's had a good run. It's had a very, very solid run. In fact, in the last 1 month itself, the stock is up 26%. Gaurang Shah joins in now with his view on some of these counters that are buzzing in trade. Gaurang, let's start with Zomato. This, for good enough reason, is the stock of the day. 12% higher, 25% for the month, and a stark improvement in earnings from what we saw in the previous quarter. Looking ahead, do you feel like there's still some more room and steam left on Zomato?
Well, Samila, first of all, it's good to interact with you after a long time. And
extremely long.
Thank you very much for having me on the show, and good noon to all of you all. So, Zomato has a history of its own. And if I am not wrong, and I stand to be corrected if I am, the IPO price for Zomato was somewhere close to about 76 rupees. After listing, the stock gained to the heights of about 140 plus, and then it corrected because of numbers were not in line and there were concerns as far as the growth is concerned. The stock actually slipped below the IPO price. It made a low of about 50 to 60. So when the IPO was there, we had recommended a subscribe from a long-term point of view. After the highs that it saw, we advised the profit booking. Again, we initiated a coverage on Zomato somewhere around 60 odd rupees. And we are maintaining a positive coverage on Zomato as of now. I think what has worked for Zomato was in line with what our estimates were. And that was the contribution from Blinkit. That is the daily provisioning platform that they are actively into. So on Blinkit, even if you are a gold member of Zomato, you have to pay your delivery charges along with platform fee. And on Zomato Gold, that is the food delivery platform, they have recently increased the platform fee. It started from 2 rupees. I think now it is somewhere close to about 6 or 7. So that has contributed to a great extent on the